So it's 1 minute after 10. Hello, everybody. Welcome to our webinar about the role of technology within anti-financial crime risk assessment. I'm happy to have you all on board, spending your precious time with us. Us, in this case, means today's presenters are my dear colleague Khan, who leads up the risk assessment business consulting, and then my person, I'm the managing partner of MSG Rethink Compliance. And when doing an introduction, I would also like to introduce you to MSG Rethink Compliance. We are part of the MSG group, meaning we are part of 10,000 consultants who are supporting our customers in 33 countries worldwide, and spending roughly about 1.3 billion to us in revenues. We are the anti-financial crime experts, meaning we are taking care about money laundering issues, about identification of terrorist financing, sanctions, fraud management, know your customers or know your counterparty as you like it, and then anti-bribery and corruption. Our main customers are within the financial services industries, but also some non-financials and captive banks are part of our customer profile. From a logistics perspective, I would like to give you a rough idea about the agenda for today. I would first give you a sort of a market overview on the technology that is somehow required or is positioning itself as part of the anti-financial crime risk assessment topic. If we have all these tools and technologies, then it's a question on how to orchestrate. That would be part 2 of today's webinar. And of course, as we would like to give you some practical ideas on how to use technology in an integrated way and also within an automated way, we have some use cases for you. And finally, we would be delighted to answer your questions. And that leads me to another part of the logistics. So you will not be able to be part of our discussions on a verbal way, but you have the chat functionality where our colleagues from marketing already sends you messages, and you are also able to send us your questions by using the chat functionality. You might be also able afterwards to send us emails by emails, your questions by emails, and we would do our best to answer them in the best way possible. We also would like to get some opinions from you about some questions we have. And it's not only about questions we have, also I guess the market might have them, and you might be also interested on how your peers are seeing those topics. And for that one, we would like to ask you to participate in our polls. So we have roughly about 3 to 4 questions during this webinar. You can reach Menti by using the URL seeing here, or by using the barcode or the code here, so that you can directly get linked to the website. It's easy to be done by your cell phone, your mobile phone, but it's also possible to do it by your desktop and using the browser. Happy to see you answering those questions as well. And yeah, I would say that's all from a logistics perspective, and so we can start the webinar and starting with a look on the market. And when looking on the market, I would first give you an idea about what we are talking about when we talk about anti-financial crime compliance and anti-financial crime risk assessment in specific, as it needs to be part of the enterprise risk universe. You all know the financial risks about credit risk, market risk, liquidity risk, and so on, which is, if you're looking on from a financial perspective or from a perspective from a financial institute on it, it's an important part, but it's not the main part of your risk universe. The main part of your risk universe is the so-called non-financial risk universe, where you have the operational risk, where you have reputational risk, compliance risk, regulatory risk. And as you can see here by that, you see the overlaps, because not every compliance risk is a regulatory risk. So you can see that there are differences. And if we then think about anti-financial crime risk, you see the overlays in between reputational risk, conduct risk, compliance risk, of course, regulatory and legal risk, and also cybercrime and IT risk is somehow part of the anti-financial crime risk. And that gives you an idea on, first of all, that there is a complexity coming with anti-financial crime risk assessment, but that there's also a need to collaborate within your organization with different other specialists to really get a holistic idea about your anti-financial crime risk landscape, where we come in a moment to, because that would mean that if we're looking on the overall process, the holistic process of how to build a risk assessment, that we discussed in our last webinar, so I will not go into details here, but it gives you an idea what kind of technologies might be required when we talk about how to perform a risk assessment, how to support a risk assessment by technology. And one main topic is the collaboration, because it's seldom the case that you have the overview about the anti-financial crime risk by your own without interacting with anyone else in your organization. So collaboration software is one part of the technology that is typically required when providing a risk assessment. And as you can see here, it's a workflow, and a workflow comes with results on every workflow step with a specific condition, whether you reach it that way or another way. And then you have to, let's say, have different other steps following based on the conditions you set. And that would be easily done by a workflow tool. So, of course, workflow engines are typically part of the technology mix used from a risk perspective, from a risk assessment perspective. And everyone knows those reports, these fancy landscape reports, and that at least gives you an idea that reporting is also a topic. Reporting comes typically as part of business intelligence tools, BI tools, and they are also about data analytics. Because you would like to analyze the data before you report it, or if you have a reporting, you would like to deep dive by using analytics to come to the ground and see what kind of measures are somehow maybe not that effective as you thought they are. And of course, if we talk about data analytics, data and data management is also a big issue here. And talking about data, the big elephant in the room is, can we use AI? Can we use machine learning technologies also within the risk assessment perspective? And yes, you can. We will show at least one use case later on how to use AI and machine learning within the risk assessment landscape. We were using a GenAI, generative AI model for that one. But let's give us a few moments. So let's think about all these technologies, and that's not all. So if you decide for the right technology mix, it's also that the regulator comes with some requirements. The easiest one, and that's an international standard one nowadays, is you have to think about a risk-based approach. A risk-based approach means you have different risk categories, and different risk categories means different sets of measures. So that comes a small challenge also for your risk assessment tool set. You have your own risk factors, but sometimes the regulator gives you also some specific risk factors to think about. So you have to consider them. There are document requirements and update requirements out there. If I'm looking on the international regulation, they would like you to do the updates more immediately. At the moment, it's standard to have once a year an update of your risk assessment to see whether it's still the right assessment that you did. And the regulators are asking to be more frequent, get more frequent updates on your risk assessments, and being more immediate here. And if you do that, considering the amount of work, the efforts you have by updating it once a year, you have to think about it in a little bit different way to deal with the technology underneath. And then data requirements. So at least some regulators are giving you a clear understanding, more or less clear understanding about data quality requirements. And data quality requirements is not only about having data or not having data, it's also about the consistency of data. So there's some regulatory requirements you need to have in mind as well when setting up your technology mix for risk assessment products or solutions. And by saying that, we would like to get an idea about your experience about technology use within the risk assessment. So I'm handing over the first time in this webinar to Khan to show you also the results of your polls. Again, my question, please participate at the poll and give us your opinion about the technology and what kind of technology you are using in your anti-financial crime risk assessment.
Yes, thank you, Dirk. I've started to share the Mentimeter presentation and hope you all can see it, and hope you did not have any issues with logging in. And now I will present the first question, which is, which technologies do you use to support your risk assessment process, your enterprise-wide risk assessment process? We have also provided some examples, but feel free to enter any technologies that you use currently. We will wait for a minute. Hopefully more answers are flying in. You can see the live responses.
Interesting. We had this webinar already done for German-speaking countries, and at least I don't see any big differences from an international perspective to the German-speaking ones here. So that's quite interesting. It's also interesting because when I take you in a minute on the journey to build a risk assessment, that's at least easy to understand for everyone, because obviously it all starts or ends with Microsoft Excel, obviously, as I can see here.
Yeah.
Okay, cool. So also some in-house development platforms. So that's also interesting. That's something we didn't have before. Someone is having an Arctic tool. That's also great. That's obviously an integrated one. So perfect. We have SAP, of course, in there. Might take some words later on in the Q&A session about that. SharePoint, it's also cool because I'll take you on a journey in a moment and you will find yourself home.
Yeah, so I will switch back to the presentation, Dirk. The question is still open, so please feel free to provide your answers. Now let's continue with our presentation.
Yep. And I mentioned, if you look on these tools I mentioned, on those technologies that I mentioned before, that the next question now would be on how to orchestrate these kind of technology to come to a more effective and efficient anti-financial crime risk assessment. more effective and maybe more efficient as you do at the moment, or at least to become to an effective or efficient if you did not do an anti-financial crime risk assessment so far. I mentioned it. It starts typically with error, and my journey is overwritten by trial and error. Because typically you start with Excel and then you change your Excel, you change formulas in there, and you're trying to be, let's say, as flexible as possible, and this flexibility comes with some own challenges. But everyone who uses Excel knows typically how to deal with this kind of a tool set. So you start with Excel, building your risk factors in there, starting to think about how to measure this risk, how to evaluate the risk, and so on. But if you think about the risk factor, that's at least the first step where you reference to some regulations or guideline documents and so on. So at least there are different ways to reference it. But it's about doing that one because it's required by this typology, it's required by this regulation, it's required by this guideline, it's required by this international standard from FATF or whatsoever. So you then build your Excel. It's nice, but you see, it's still not a risk assessment report so far. So it's covering the heart of the risk assessment, but it's not the report itself. So you're extracting data or you link data into a Microsoft Word if you stay within the Microsoft Office family. And that's pretty much sort of an technology mix that we see a lot in our customer base. And then you build your document. The document is typically not a 5-pager, not a 3-pager. It's typically about not even by 50 pages. It's much more that you need to bring in here. And if you have a risk committee, or at least for your general management, you would see this report more as an attachment to a more management-alike kind of reporting your risk and your risk status and the risk landscape. So out of your Word document, you're rendering a sort of a management report, a management summary, and then you're using Microsoft PowerPoint for that one. And of course, PowerPoint might use the report functionality that is given in Excel as well. But that's not the big question. So that's somehow easy and understandable and the normal way of doing it. But then you're figuring out, I need to get some of my colleagues, some of my peers involved to get the risk assessment really done. I would like to get some information about statistics, how effective are the measures, or at least help me to evaluate whether we have this risk by statistics or whether we don't have this risk in our organization. So what you're doing now is you're sending out by email these Excel files or part out of your Excel workbook to your peers, requesting them to answer the questions they might be responsible for to answer to you. And every one of you, your peers that you send your email, and you yourself, you need to get information, and information is rendered out of data. So you might try to get data by your core banking system, some master data, by your customer management system to get some customer data out of it, from your monitoring and screening systems to get some statistics out of it. The same for your case management systems and so on. So at least after this kind of exercise, you are an expert in how to write SQL statements the right way to get this data. As long as you don't have a sort of a data management that enables you to use this data in a more easy, more end-user friendly way. So, and of course, you think about, I need to get this done also, I need to provide this whole orchestration also to my auditors, because they want to see that you're not doing only your risk assessment, but that you are doing this risk assessment in an appropriate way. So it's all about an audit trail, and so you think about, okay, I'm bringing this one into a sort of a collaboration and document management system, for example, Microsoft SharePoint. because SharePoint is now taking care about your Excel file, and you can grant access to your Excel file to all your peers, so you don't need to send an email and extracts out of your Excel, so they can all work on this one Excel. And SharePoint is taking care about the versioning of the Excel. It's taking care about the versioning, but it's not taking care about what's happening inside of your Excel. If you work with multiple people in this Excel file, you might have a challenge in providing the right audit trail, for example. But nevertheless, somehow this whole construct is working. But looking on all these dotted lanes will give you a sort of an understanding that maybe providing data consistency in this construct is also a quite heavy challenge for you. And then let's assume that you have to have a regulatory change hitting your system. And now you have to think about how to get this one in, how to get new products coming with new risk in, how to get it inserted in your Excel. Or you have a systematic change because someone is requesting you to do the whole risk aggregation in a different way as you do it now. That means you have to change the whole formulas, the whole risk assessment process within your Excel, which is, of course, doable. You build it once, you have to rebuild it now. The more critical is the auditor, who is not very comfortable with this sort of Excel sheets and might request you some reports that you probably have to deliver. Hopefully you can deliver it. And then the ever-changing data might stressing you, and sometimes even Microsoft wants to provide you with a new version, and a new version of Excel might have challenges with the way you're doing your calculation at the moment. So you have to adopt it just because there is a change in the technology to get this whole system environment in a stable mode. So sure, it's doable. And there are a lot of organizations out there who prove it's doable. So no doubt about that. But the key question is it efficient and is it effective? And in regards to the efficiency, I have my doubt, but it can work for specific organizations. Is it effective? I have also my doubts because there are pretty much for each of those big four auditors, they have studies out there on how many mistakes you easily build into an Excel sheet that has more than 100 lines or 30 columns. And by building an anti-financial crime risk assessment, you easily have more than 100 lines full of data, and you have easily more than 30 rows that you need to use. So following up those studies, the probability that you have major mistakes built into your risk assessment Excel is evident. So that's also a topic why we think it might not be that effective. But Khan, would you provide us an idea on how we can get a better understanding what might be the right technology mix and what needs to be more advanced technology to be efficient and effective?
Yes, of course. So in order to answer the question, is it efficient and effectively, we think it's worth looking at the complexity of each company. So the complexity can derive from the size, of course, but also the number of processes, maybe also the complexity of your product portfolio. So it's quite a matter of fact that the higher complexity you're facing, the more you are in the requirement of using advanced technology. So taking a look into the more traditional and the more advanced sides, you see we have taken out three major points that we need to consider when assessing the efficiency and effectivity. So first one is the relative tech costs, but also the cost for manual processes, which also include the time when you need to take care of errors that you might have with manual activities. But of course, the compliance risk is a major aspect that you need to consider in that whole aspect. So the more or the higher the complexity, the better is it to look into the advanced technology side, where you see that the relative tech cost, but also the cost for manual processes are quite low. Whereas if you are a smaller institute, it still can be very efficient and effective to use the more traditional technologies. So the question that Dirk raised before needs to be considered in a more individual perspective. But I guess that's not rocket science, of course, but the majority of the companies are maybe here in the middle, where it's not obvious or clear that I'm a very high complexity and I need to have advanced technology in place, but also not the smallest institution. So therefore, you need to take maybe time and reassess the current risk assessment process in your organization and look into the cost and also in relation to the compliance risk that you want to avoid. So related to that overview here, we also have 2 more questions from the Mentimeter. So please head over again to the Menti poll, and I will share presentation again and hope you join me for the next question, which is, what's the complexity level? So that is the first question that we're interested in, how you assess your own complexity of your organization. And then we have a second question related to that complexity, and that might give you and also give us a better insight in the situation that you are facing.
Yeah, thanks, Karen. So let's say back to the slide you had a minute before. Maybe first of all, there's on our website, there's a sort of a cost calculator or a return on invest calculator for doing risk assessment. So you might be interested in using that one as well. On the other side, just in regards to the relative tech costs, so I guess modern technology comes typically as a software as a service, and that means you don't, even if you start with this kind of technologies, you typically don't have this big invest upfront as you have with classical software. So I think that's also something that might be interesting. Now we have
yes.
Pretty clear voting here, so it's interesting. Nobody has a low complexity and nobody has a high complexity. It's always the same. It's an interesting result because it's not. It's always the same, more or less. So it's also an interesting topic. So maybe let's see whether the appropriate technology is used or whether it's seen in a different way.
Yeah. So the next question, as you see on the screen, is in relation to the complexity. Do you think the current technology in use is adequate at the moment? And that is a combined result that we are seeing here. So for these red dots you're seeing, those are the ones of you who assessed the complexity as medium high. And we have quite a wide spread from yes, the technology is adequate to no, and nothing's planned yet. Yeah, so we have still more answers flying in. Let's wait a second. But yeah, no real big trend.
Yeah, but we also had at least one person in the room who is using already an integrated risk assessment solution. So that might be the one who says yes, technology is adequate. At least that would be an assumption from my side. It's great. So let's continue. Thanks for your votings.
Yes, thank you. So I will share this presentation again. We'll continue. So maybe we can have a look, the last overview of that topic. This is how we see the business architecture of an best practice integrated risk assessment platform. So it's not always, it's not just having that sense platform with all the functionalities that you require, from building flexible risk models through automated risk evaluation. You will also have workflows, support, but one of the biggest pain without advanced technology is to keep the audit trail to the satisfactional level for often regulator, for example. And having this advanced technology, this is a part that can be fully automated and you don't really need to take care of it. And so we are talking about the integrated platform. So it's out of saying that we need interfaces to external systems as well. So we have some examples here from ERP, CRM systems to AML monitoring systems. But of course, there's still a need, and maybe this is also something you won't or don't like to miss, to use the MS Office like Excel. So you can still per click export data to an Excel sheet and then to analyze them for other purposes. And the integration of Word, for example, because you would still need a report for the risk assessment, is also ensured. What we also see, this is also one part of our practical examples, is the fact that you need to monitor regulatory changes, which is the first step, because that is the starting point where you need to reassess, reevaluate your risk and compliance management system in order to close the gaps of new changes, new legal changes. And policies and procedures as well. This is a bigger part that comes to the operational level that needs to be managed as well. And the integrated platform needs to include these modules as well. So I would like to go to the next agenda point, which are the use cases. And we would like to showcase some practical examples to you where we would like to cover, for example, the automation for risk evaluation itself, data integration, but also the risk assessment update process, etc. And Dirk will also cover one use case for using the generative AI technology. So I would like to share my screen and show you a first example. So what you're seeing here is a risk assessment platform with all the functionalities that you've seen before. I would like to show you, like, once you have set up everything, you build the foundation to automate almost all the processes afterwards. So just quickly show you the methodology, for example, where you need to determine what risk levels you would like to use. We are all aware of these 3 levels, but also the 5 levels risk evaluation ratings. And you can also determine how you would like to calculate the inherent risk, but also how residual risks are being calculated. So this is part of the setup, the first part. And the second one is the so-called risk model. So risk models are nothing else than a structured risk evaluation schema. So you can use risk models for different purposes. We have here an example for country risk rating, where you can assess each individual country considering different indices, risk factors, how to calculate the AML risk related to a specific country. In our example for today is a product risk model, so which is designed specifically to look into different aspects of a product in order to assess the AML risk of a certain product. So you can use it for an annual review of your portfolio, or you can use that risk structure also to evaluate a new product that you would like to introduce, for example. So what I also like to do is to show you now how to automatically assess this a new product, for example. So you go to the risk assessment, and you see here we have created a product risk assessment evaluation with already 2 products, credit card, saving account, and now we would like to add a new product using the same risk model. So here we have the current account, is just as an example. You are able to create a new risk assessment based on a current one, for example, the credit card, and just to adjust things that are different, of course. So after created the risk assessment object for the current account, you can assign the task to different persons, to different departments. So here, these are coming from the existing risk assessment. Now you can change if you want this assessment of the current account to be done by someone else. Then you can just change it and go then directly to the risk evaluation. So you see here on the left-hand side the structure, so the risk model structure. And this is more or less a questionnaire that can be answered manually. Or, of course, we want to have automation where we can have. So there is, of course, a possibility to import data as well. So you don't need to go through the questionnaire manually. Here you can prepare an upload file, which can be done within Excel. You can get information from different systems and prepare this Excel sheet. Here we have some examples from statistics, maybe coming from AML monitoring systems, but also other systems that can be interesting for your risk evaluation process. And now you can just easily upload this file and then integrate all this information to your current risk assessment. And the good thing about is having that file prepared once, it's quite easy to update it on an annual basis, because not all of the information will change, of course. So you just need to update those information that change maybe after a year or after an event. Here you can upload or integrate the data now for the current account assessment. And now you see this has another risk evaluation or risk rating, of course, because the answers of the questionnaire has been answered differently. And now you can provide a weighting, adjust the weighting of these 3 products. You can have an equal distribution, but you could also use the weighting feature to reflect the volume, the transaction volume of each product. So a product that you have create more revenue with would have a higher impact on the overall product risk assessment. So here, this is a very great way to have an assessment from your entire portfolio. You need the different inherent risk of each product, but also the control effectiveness. And of course, the last aspect is the residual risk rating. One aspect of the automation, of course, cannot be missed is the report. So you see with a click from the application, you can create such a Word report, and getting information on a very high level. For the executive summary, you can integrate these charts into another document, into a presentation, but you could also use this Word document as a basis, and then also add certain aspect or description to that, and use this document as your final risk assessment report. Yeah, so that's a very short introduction to how to automate your parts, big parts of your risk assessment process using an enterprise application. And now I would like to pass over to Dirk for our next topic with generative AI. Dirk, you can take.
Yeah, I will take over. So GenAI is obviously the big elephant in the room nowadays. There's no presentation that can go without having an idea about how to use GenAI into a specific situation or a domain-specific solution. So we were working on the AI side since multiple years already, and also with GenAI we have some experience. And what you can see here is just one of our tool sets where we can feed in regulatory documents, guidelines, consultation papers, cases, and so on, so that we can provide you some insights on the, let's say, what's going on in the market from a regulatory perspective. And you see, first of all, that you have a sort of a similarity check. So you cluster the documents, and typically you cluster, if you see over your documents, you see that typology papers are in one cluster, typically, because they are all somehow the same. It's the same for the regulations and some for the consultations. Sometimes they vary a little bit, but nevertheless, you can see it quite easily here. More interesting might be to get an abstract. You can have a short abstract, you can have a longer abstract on what's written down in this document, in this specific document, or overall. So the good thing is it's using a large language model, but it's not using ChatGPT, so you can have your own data. Your own data is secured in this application, and of course, as we are not using OpenAI, in this case, it's less hallucination of the model because it's really fed by those documents. And of course, you can chat with the system and ask your questions, and would like also to identify automatically whether there are new topics coming out of these documents that you need to cover into your risk assessment. And if we're talking about online gambling, you might want to have a chat with the tool about online gambling. And one of the answers to that question would be such a short summary like this one, and it's highlighting what might be important. So it obviously can only highlight if it knows your risk assessment as well. So it knows your the way you did your risk assessment and the risk appetite, so that they can that the tool can tell you what might be missing from the tool understanding, and then you can have a look on this one and modify, update, or whatever is needed your risk assessment.
Continuing with our use case, we can take the results from the chat Dirk has just shown, and taking the example of the new or one of the key feature from this regulatory document, we now want to update our risk model. For this example, we are looking at our industry risk rating. So that is a structured risk evaluation for each industry. And we have already set up certain risk categories with their corresponding risk factors. For example, is the industry of high cash intensity, or what is the anonymity level of the each industry? And now we would like to add a new aspect to be considered when we evaluate a new industry. So I would like to show you how easy it is just to update an existing risk model in order to reflect regulatory changes. So you just need to click on Add New and create a new risk group, which can be a regulatory or legal environment. And under that risk group, we can create a new risk factor. And that can be named as legal framework. So as I told you, each risk factor needs to have a risk indicator, which is more or less a question from the questionnaire. We need to do the last step of creating an indicator for that risk factor. And it could be formulated in the following way. Is there a robust legal and regulatory framework governing the industry across jurisdictions with respect to AML? So we have seen from the chat result that that is a weakness for the online gambling industry, but it could also be relevant to be evaluated for other industries as well. So if that question is answered with a yes, it can lead to a higher risk and a red flag when considering different industries. So now we need to select the answer options, and that's it. Now we have a new updated risk model, and you can reflect in the new aspect which you have learned from the last regulatory document, and you have an up-to-date and compliant risk model. And just to show you how easy it is to keep track of the audit trail, you just need to click on that feature, and you see that I have updated a new risk indicator, a new risk factor, a new risk group on that specific date and time. So you don't need to do anything, and everything is stored automatically so that you can prove to external parties, to regulators, how and when changes have been updated.
I would like to invite you to some of our next webinars where we really show the full range of how to use GenAI models as part of your anti-financial crime risk and compliance program, from capturing or supporting your policy and procedures to the risk assessment and how to identify gaps in here. So we have the next one is more on the governance of the systems, where risk assessment plays a role, where policies and procedures playing a role, and of course where there's regulatory change or legal change is also a very important part in here. So there are several ways to use AI, to use GenAI within your risk assessment process, and we're happy to answer some of your questions now or by email later on. So thank you for your time. Thanks, Khan, for demoing the use cases. Yeah, so I'm not sure whether we have some questions in here.
Yeah, we do have one at least, yeah.
With references to your cost savings calculator, when it comes to transformation to our IT solution, cost is always a big deciding factor? What trends have you seen in terms of comparison of costs between the development, implementation, operational cost of homegrown solutions versus the cost of acquisitions, implementation, and operations of integrated risk assessment solutions? Well, that's the general make or buy question, if my understanding is right. So it's hard to answer, to be honest. So typically, more recommended is a standard solution. First of all, regulators might know those standard solutions and might not really be suspicious about a home built and own grown solution. But that's maybe not. I guess from an overall perspective, you are always more flexible if you build it by your own, because you can do whatever you want to do. The problem is you need to do it, and that's always the issue. What we see from a trend is more customers are moving away from their own build solutions, like those SharePoint solutions, those Excel solutions, and so on, into a standard solution. And you saw it within the participants here. At least one was already using an integrated solution, like Arctic was mentioned. Another one mentioned SAP. So SAP has at least two options: the enterprise risk management solution from SAP, or the Signavio tool, which is somehow a little bit different to what we showed you. So it makes even sense to have an integrated special solution integrated into your SAP solution as well. But the trend is, and that was one of the questions here, the trend is definitely into going more to standard solutions, away from building your own solutions.
There's a second question, Dirk.
I'm mostly using Excel and email to request the different information from the other departments. How long would it take to start using a tool like you showed? Oh, the good thing is you don't have pretty much of initial setup costs. So it's I would say, in regards to the classical solutions, the investment would be low. Of course, you have to set up the solution so that it knows how you would like to do your risk assessment, but that's something that could be done easily in a few days. So it's really typically a very low invest in starting up. If you are if you would like to start this one up as a group risk assessment for, let's say, 20 entities in different regions and different regulations, the setup might be a little bit more complex. But in general, so our experience is we have it's a pretty quick start to go into a standard solution. Is it the solution data lead or threat lead? Both. So you can set up it in both ways. So the typical way is, and the standard way is that it's data led, but you can also do it the other way around. But that would mean that you have a sort of an early warning system up front, like the GenAI solution, for example, that we showed you, maybe with a modification about a sort of a crawling solution combined with, so that the potential threat can impact the risk assessment from outside. So if there is a request to change from outside that is coming in, if you detect a threat down from your monitoring or screening systems, that would be easily done. That would be done in a similar way as Khan already showed in this integrated solution. So that's also possible. Good. So now we are almost 5 minutes over. So if you have more questions, feel free to send them to us. You always have the possibility to send us via info@msg-compliance.com. And also just connect with us over the possibilities shown here. So thanks for your time. Appreciated you stayed with us, even running in overtime. Thank you a lot, and would appreciate to welcome you in one of our next sessions. Thank you.